Hello students, we are going to practice make or buy decision. As we discussed in the class, one of the important operational decision is to whether to make or buy the product. So in this case, we will analyze what is the relevant or avoidable cost if we take these buy cases like the outsourcing. And then we will analyze the incremental analysis. Using the incremental analysis, we'll compare make case, buy and leave facilities idle, and buy and rent out facilities, and buy and use the facilities for other product cases, so that which one is the lower the net relevant cost. Now, perhaps Nantucket Nectars will eliminate $50,000 of fixed costs if the company buys the bottles instead of making them. For example, the company may be able to release a supervisor with a $50,000 salary. That is the avoidable cost, which is a relevant cost. If the company buys the bottle, $50,000 fixed overhead would be eliminated. Okay. Another manufacturer offers to sell Nantucket Nectars, the bottles, for 18 cents. So should Nantucket make or buy the bottle using this the comparison. Here the purchase cost in the making case, we don't have this information because that is the making case. Direct material, now we have this direct material when the total cost for 1,000,000 the bottles. So I'm gonna take all this information up to the variable factor overhead. And then per bottle also I'm gonna collect this direct material per bottle and direct labor cost per bottle and the variable overhead as well. Then how much is the fixed factory overhead avoidable by not making? That is avoidable cost. That is avoidable cost. Because we have the avoidable cost $50,000 out of 80. If we are given unavoidable cost $50,000, then the $30,000 is avoidable cost. But we have given the $50,000 avoidable the salary, supervisor salary amount. So we put the $50,000 there out of $80,000. Then we don't put like this because now that is avoidable cost out of how many bottles? Right, the 1,000,000 bottles. So this the fixed factory overhead over avoidable cost per one bottle is 5 cents. Okay. Then next buy case in total and per bottle. Now in per bottle, how much is that? We have 18 cents. So 0.18 cents per bottle for the outsourcing, and then total we can calculate just 1,000,000 bottle. So the total amount is $180,000 the purchased cost. So let's just sum up this total of making case, that is avoidable cost, total amount avoidable cost. If we take this outsourcing of buying is $180,000, then we can reduce $170,000, and then that is avoidable cost. The per bottle is also, we can just sum up now the 17 cents. But we have this amount what we have to pay when we outsource the purchased cost. So 180, 18 cents per bottle. So which one has a lower cost? Definitely in making case. In making case, that is the relevant case. If we outsource, then we have to pay this $180,000. Then this amount. So you have to remember that out of $80,000, $30,000 is unavoidable cost, which is irrelevant information, regardless of or whether to take this outsourcing a buying case. This $30,000 is just the sunk cost, forgone. right? We anyway, in two cases, we have to pay this $30,000 out of 80, except for this $50,000 avoidable cost of this relevant cost in supervisor's salary expense. Okay, so $170,000 is the relevant avoidable cost. So we put the difference between two as well as this two. So avoidable cost, the relevant cost in making $170,000 is the amount we have to pay if we are making this buying case 180,000. Definitely we have to choose the making case. Then let's compare these four cases. Suppose Nantucket can use the release, the facilities, and other manufacturing activities to produce a contribution margin to profits of $55,000, or can rent them out for $25,000. What is the best alternative? Now we want to find the lowest cost we can spend. So in the make case, we already calculated. Let me show in negative number so that you can compare the spent amount in negative. And then buy and leave facility idle. Even though the company has the facility idle, but that is the actual, the cost. Oh, then let me put negative there. Okay. Then buy and rent out facilities. We have the rent revenue. How much is the rent revenue? Right, 25,000. 25,000. We don't have additional contribution margin in this case, but we purchased this from outsourcing 180. Then next, buy and use facilities for other products. In this case, we don't have any rent revenue, but we take some additional contribution margin for other product because we are now using the facilities for other product, for making other products. So 55,000, and then that is negative the cost. Then let's just sum. Let's just sum up this total relevant information. Then let's drag. Then in the making case, the cost is 170. In the buy case, $180,000 is the cost. But we can reduce this. We can reduce the cost by $25,000 when we rent, because we receive the rent revenue. So the 155,000 is the cost, net relevant cost. But here, that is the lowest one. We have the lowest one, the net relevant cost in a buy and use facilities for other product case. So definitely we have to choose this operational. We have to make this operational decision of buy and use the facilities for other products. This is all. See you in the next video clip. Bye bye.